Hello everyone, welcome. Long time not seeing. So 7th of June. Today we have the price action webinar, new format as you can see. And I'm Andria, for those that they have attended before my webinars. And before we start, just a quick intro of what we're gonna cover today. Okay, let me double check that this is recorded. And bum, bum. Yep. Okay, all good. It's been recorded, so you're gonna receive the recording as usual at the end of today's webinar. And you will obviously want also the handout, which I haven't uploaded. I forgot. My bad. So I'm gonna quickly, like in less than 5 minutes, I'm gonna upload also the handout for you. And it's the same slides again, so you can have it in a PDF version as well. So just I would like firstly a bit of an intro of what we're gonna cover today. So what we're gonna cover today is literally price action, how to trade without any indicators on your charts. Okay, price action trading is just it's a very famous approach. First of all, there are a lot of price action traders that they solely focus on what the candlesticks, what the price presents, what signs it presents. I will come back in a minute. I need to make sure that you can hear me loud and clear as usual. And until I have a feedback from you, I'm going to read out loud the disclaimer warning as usual. Please, if you face any issues in regards to your trading, any question that you might have, not necessarily correlated with today's webinar. So this is our email address. Okay, here it is, webinars@agefm.com. So don't hesitate to contact us. Me, Stuart, support team will try to reply as soon as possible and obviously to help you. Okay, so don't forget that we are here to help. So this is the email address that you can contact us. Nevertheless, as I mentioned, I need to go through the disclaimer warning as usual. So this material is provided as a general market communication for information purpose only and does not constitute an independent investment research. Nothing in this communication contains or should be considered as containing an investment advice or an investment recommendation or a solicitation for the purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources, and any information containing an indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledged that any investment in leveraged products is characterized by a certain degree of uncertainty and that any investment of this nature involves a high level of risk for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Risk warning. Trading leveraged products such as forex and derivatives may not be suitable for all investors as they carry a high degree of risk to your capital. Please ensure that you fully understand the risks involved, take into account your investment objectives and level of experience before trading, and if necessary, seek independent advice. Please read the full risk disclosure in our website along with all the legal documents that you might want to check. Okay, so we're good to go. Let me open the question box. Guys, I don't have any feedback from you in regards to the audio. I would really appreciate the feedback. I want to make sure that everyone can see my screen and hear me loud and clear. Otherwise, I cannot proceed. Perfect from my side. Rodney is saying, thank you very much, dear. Thank you very much. So we're good to go then. Okay, I'm gonna skip myself. And Andrea hasn't sent you obviously the handout. Let me send it to you right now. Okay, handout will be up in less than a minute. Yeah, come on, it's a bit slow. Yeah, it's on. You can download the handout from the handout section. Okay, so where are we? Perfect. Okay, the art of price action trading. Sorry. So okay, I cannot say why someone could use or would like to use charts without any indicators. That solely has to do with the personality of each one of us, with whether the indicators complicate the person, the trader that, so, I mean, it has to do with you, okay, solely. You can try it in a demo account, but it doesn't mean that it will work for you, because it has to do also with our personality, okay? So I will just demonstrate today, and you can have a look. You can try it in a demo account, but yeah, it is upon the discretion of each one of you guys. Okay, so price action trading. Okay, let me just, here we are. First of all, what it is. Actually, this is what we're gonna cover today. Sorry, I missed that. Obviously gonna see together what is a price action trading, how can we find support, resistance, reversal points, pin bars using price action trading, when and where do I enter a trade based on the price action signals. Where is the smartest place to set my stop loss? Where is the smartest place to set my target? And in general, any question that you may have, feel free to stick in the box and I will reply as soon as possible. So what it is, price action trading is just that. It's just the decisions that you're gonna take, you're gonna make on price alone. Okay? No indicators, just pure price monitoring, candlesticks. Okay, so support, resistance, reversals, and pin bars are all key to this approach. And this is what we're gonna cover today, what we're gonna see today. Let's see in a more detail what it is. Okay, so price action, as I said, simply the monitoring of the movement of an asset. Price action trading is just another trading strategy that is neither technical analysis, neither nor fundamental analysis, but purely the price move, how the price of the asset moves. So the price action traders, what they actually use, instead of what they actually do, sorry, instead of using technical indicators in order to identify how the price, where the asset is going, they use the price action, so the recent price movement of the asset, as their own technical indicator. Okay, so they monitor the price movements and they use it as their own technical indicator, and they place any trades, entries, stop losses, etc., based on their individual decision making. So just to make you understand a bit how this works. So who are the bulls and bears in the markets? Can anyone reply to this question? Who are the bulls and bears in the markets? No one? Yeah, who are the buyers and sellers in the market? Is it us? Is it us as retail traders? Is it the banks? Is it the hedge funds? Who are they? So the bulls and bears in the markets, the buyers and sellers in the market, is definitely not us. And I'm referred to us as the retail investors, the retail traders. The retail traders might be less than 10% of the market participants. So they have a little impact in the market. The other 90% of the market participants are mainly people with billions, people that are trading billions. So hedge funds, banks, the general institutional players, companies, people with billions. Okay, so that's why it's very important to understand the overall market sentiment. So what's the majority, where the majority is standing. So many short-term traders rely exclusively on price action to make a trading decision. Okay, so the technical analysis is just a derivative of price action, right? All our technical indicators are based on some calculations on the price action. So it's technical analysis in general is a derivative of price action because it uses past prices in calculations, and with these past prices, this price action, these past prices in calculations can be used to inform trading decisions. But if we just forget a bit about indicators and solely focus on the price action, you should know that the price action can be seen and interpreted using our charts, obviously, by observing the prices over time. So not only the past prices, but also the current, the latest prices, the latest prices of the assets, the current ones. So you need to comprehend that you are not the market movers of the market, first of all. Okay, so that's why. So as I mentioned, we are the retail traders are just less than 10% of the whole marketing participants. The other 90% or 80% or whatever are big institutional players who tend to play in the medium and long term. That's why in a price, if you're considering price action trading, you should consider monitoring also and observing the long-term picture, okay, the long-term outlook of an asset before moving and zoom in a lower time frame, because you need to be aware of the long-term overall outlook of each asset. Okay, that's one important thing that I wanted you to have in mind. Second, we said that in the price action, what we observed is solely the charts, is solely the movement. So, by observing solely the movement, what do we need in order to take a decision and in order to enter the market? We need two essential things: support and resistance levels. To identify support and resistance levels. How we could do that? By closely observe our candlesticks. The candlesticks can give us strong key support and resistance levels. Why I mention candlesticks? Preferably, we use candlestick charts because they help us to visualize better the price movements by displaying the open, the high, the low, and close values in the context of up or down days, of up or down hours, and so on and so forth. So candlesticks actually, using candlesticks allow us to observe also candlestick patterns. Remember, we have seen plenty of candlestick patterns in the past, such as equilibrium pattern, evening and morning star formation, head and shoulders, harami, cup and candle, and so on and so forth. So these, other than the fact that with the candlesticks we can identify support and resistance levels by checking also displaying the open, high, low, and close price, we can actually identify also patterns, which some of them tend to be bullish, some of them tend to be bearish. So the aim is to find order in the sometimes seemingly random movement of price. Okay? So we're gonna see examples, so don't worry about it. As I mentioned, it's one of the no, I didn't mention it, but yeah, it's true. Price action traded is very common. It's actually and not solely to retail traders such as you guys, but also institutional traders, because institutional traders tend to focus only on the long term or mainly to the long term picture rather than intraday picture. So the big institutional players that trade billions, they don't really focus on the intraday trading. They are more of a medium and long term picture. So that's why it's a very common strategy. It has become over the years less popular. That was mainly due to we have a lot of lately, we have not lately, the last few years, 5-10 years, we have seen a lot of algorithms, expert advisors, and in general high frequency trading. So it has become over the year less popular, but it's still there and it is widely used and very commonly used. So many patterns, as I said, many medium-term traders, long-term traders, or even day traders tend to place their trades with usually large trades, very large trades, uh, with the use of leverage, okay, using, however, price action as their only guide with the goal of generate a profit from very small underlying movements. So technical analysis, fundamental analysis aren't especially useful in these cases, given the very short-term nature of the price movements. But price action can provide some helpful clues into supply and demand balances. That's why it's very common, and that's why it is widely used from people that they want to benefit from very small underlying movements. So that's why price action trading involves placing trades exclusively based on price action rather than fundamental technical analysis. So as the identification of the trade condition is based on established analysis criteria, the decision to buy, sell, or hold is subjective, right? Each one of us thinks about it and takes his own decision, which is subjective, on whether it will open a long position, a short position, or remain outside the market. So this is subjective. Okay, hopefully we are good so far. I cannot see any questions, so I think we are good. Now, I know that is still the whole, everything that we have discussed so far is not very clear in your head, but you're gonna see examples, so don't worry about it. I have on the left-hand side candlesticks, candlestick formations using fractals, pin bars. You can see the tail. If we have a long up tail, that's a bearish signal. If we have a long lower tail, it's a bullish signal. Considering that having in mind that the body of the candle is very close, is small, sorry. Fractals as well. This is a bullish signal. This is a bearish signal, so on and so forth. But we're gonna see. So these are some examples. Examples of price action trading are the swings, so high and low. Some breakouts of a ranging market, breakout of a support and resistance level. Consolidation are some example as well of price action. For instance, if we can see sometimes short-term traders, intraday traders, watch for a price to break out from a prior price that occurred a high volume before taking a long position. But that's an example. I will show you exactly. I will demonstrate in a chart, so don't worry about it. Okay. This is how you can understand a bit the price action concept. So remember that a position occurs, trade in general occurs only when we have two parties. We have the buyer and the seller. So we have two different views. We have someone that is buying and someone that is selling the same asset. This is in theory. So in theory, the buyer and seller should have access to all the same information about the asset. So if we're gonna trade euro dollar, for example, and I'm buying, for example, euro dollar, Lizzie is selling euro dollar. In theory, both of us, both me as buyer and both Lizzie as seller, we have access on the same information. What I mean, the same information, the news, the same technical indicators, the same fundamental analysis recommendations, the same information in general. However, despite this, the buyer and seller come to opposite conclusions, right? I decided to buy, but Lacey decided to sell. Why is that? Why does this happen? Since we have access on the same news, the same technical indicators, the same fundamental analysis, why we decided to take two different positions, two opposed positions? Simply because each trader has his own individual behavioral judgment, which leads to trading with opposite views. Remember, the trading is subjective. Okay, even though we have access on the same information, we have taken two different decisions. And I have an example over here. So, for example, we have over here a 5 and a 9 and a 20 moving average in this 1 hour chart. We can see over here that my 5 and 9 cross above the 20 moving average, right? It's visible to all of us. But even though this cross of the 5 and 9 moving average cross above 20, this is supposed to be a bullish signal. However, even though for some people it was a bullish signal, some others decided to sell. So buyers may base their decision on this standard recommendation that moving average crossovers give a bullish or bearish signal. But sellers may take a contrarian view that the standard recommendation to buy on crossovers will lead to an overbought situation, and hence it is better to sell. So even though we have the same exact we're seeing the same exact indicators, we're seeing the same exact behavior, we have the same access to data, we still have two contrarian views. Okay, so that's not bad. Okay, a market, in order to move, we need both. We need buyers and sellers. Okay, but it's just to make you understand how contradictory um, and subjective the trading decision could be. Now, we have seen that. Sorry, let's move on. Perfect. Are you okay so far, guys? Hopefully you are. So we have speak about what is price action trading, the patterns, the theory around it, and etc. So now let's see an example in order to make you understand how the price action trading works. Over here we have S&P 500. It's an old example. Okay, don't try to search for any signals or something over here. I mean, it's a very old example. I think it's an example that I took a screenshot 2 years ago. I'm not sure. So this is S&P 500 weekly. You can say, but Andrea, I don't care about weekly. I care about 1 hour, 4 hour, 30 minutes. Fair enough. It's just to show you an example. You can adjust price action trading in every single time frame, but you need to stick on it, okay? It's just an example. It was a good example. That's why I put it on. Nothing more, nothing less than that. So, as I was saying, here is an S&P 500, okay? Ignore this bit. Can you see? Ignore this bit. Let's assume, oops. Let me zoom in and let's focus over here. Okay? So let's assume that when we were observing our chart, like every Friday or early Monday morning before the market opens, I always say in my live analysis that, guys, check how the weekly candle closed. This will give you clues, will help you in regards to next week's trading. And yeah, every Friday night or over the weekend, I'm checking how the weekly chart, weekly candles closed. And I've seen that the S&P keeps moving sideways, sideways, sideways. So I decided to put two lines. It was a ranging market, obviously, okay, up to here. It was a ranging market. Since the, as you can see over here, since the in the medium term, because we are in a weekly trading, since the S&P 500 stuck within this area, so it was consolidating within this area. So I put some lines on. Okay, right? Decline, bottom over here with this long tail candle, long lower tail. Can you see? Can you tell me what that means? If we have such a big tail at the bottom of the candle and a tiny body, what that means? Can anyone tell me? No one? No one? Come on, I know that you know the answer because we saw it. We had an example in the previous slide. If we see a small body candle but a very long tail below the candle, what that means? Is the bullish or a bearish signal? Come on. Come on, I'm sure. Yes, thank you, Blake. Yes, bullish. So apparently the asset bottom but quickly turned up. So bulls managed to close the candle bullishly, fight against the sellers, that the sellers managed to drift the price up here, but the bulls quickly gained the control. So that tends to be a bullish signal. So what we've seen over here is a bullish signal, but at the same time, indecision, because we have seen the next consecutive candles a bit sideways. So decline, stalled at support area, a bit of indecision until the price managed to move away, confirming this bullish sign that we initially had, and moved away and retested once again the resistance area. And then the same again and again. It hit the resistance sideways, sharply down, stalled in the support area once again with these long tail candles suggesting a potential bullish bias at the support level. Indeed, rebounded and get back to its resistance level. So reversal trades in general. Okay, this, by the way, this is something that you can see very very often in trading, by the way. I mean, decline, stalled in support area, indecision, and then rebounded. And then again, indecision in the resistance area, and then moved away again. So it's something very common in trading. But what is important to understand over here is that reversal trades, such as this one, or this one, the pullback here, or the rebound here, okay? So reversal trade includes three parts. First, you have a presetting trend. So presetting trend down. Okay, then indecision, and we have seen a bit of sideways movement. And this doji candle over here that was clearly suggesting indecision. And the indecision is on the support or resistance level. And then eventually reversal. So presetting trend, in this case it was down, indecision on support or resistance level, in this case is support, and then reversal. So we have a rebound. The same stands here, preceding trend, indecision at resistance area, and then finally reversal. The same, presenting trend, indecision at support area, and then reversal. So ask yourself, who is in control of the price? This is what you should ask yourself every single time that you're checking your candlesticks. Every time that you're checking your first candlestick, your second candlestick, and also checking the length as well, you should ask yourself, who is in control? And always have in mind that every action, every move reacts on a presetting trend for the next movement. So this indecision that we kept seeing on the support and resistance levels, okay, confirm this sideways move, overall sideways move. However, have in mind that if you have seen something like that in the weekly chart, okay, and it was moving sideways, you could go down in the daily chart mainly, possibly, sorry, and trade on it. Trade based on the fact that if we identify an indecision close to support and resistance level having in mind that we initially had a preceding trend, then that implies to a reversal, right? So presenting trend, indecision at support or resistance level leads to a potential reversal. Okay, the same stance, presenting trend, indecision at the resistance level, that was a sign that it could eventually turn down and proceed to a reversal. Okay, so sometimes it's that simple. Now let's see another example. Actually, it's a demonstration rather than a real example. What we have over here, actually this is a pound yen, but okay, it doesn't matter what it is. It was just for demonstration purposes. So what we have over here, so by the way, you don't need a huge presetting trend, okay, as you obviously understand from my example. What we have over here, we have the asset down, found some support over here, provided some long tails, especially that one, but held support, okay, and reversed, right? So we have support and resistance level. If we miss trading on this indecision at support opportunity, it doesn't mean that we cannot keep monitoring the asset for potential opportunities to trade. As you have seen over here, it was stuck in a support and resistance level, right? That one is a support because it found support over here and the lowest low was here. So that was our support level. And our resistance level is this one because it was the level at which he struggled to break, right? And we have seen indecision close to resistance level. So these are our resistance level. Indecision, so that's another thing that you should have in mind. So we have put our support and our resistance level on. What happens if the asset breaks the support or resistance level? What happens? That's a sign. Okay, that's a sign, but it's not an entry point. Okay, it is a sign, but it's not an entry point. An entry point to enter so okay, let me take it step by step. So as I said, a breakout, let's in this case it's the resistance area. It is a bullish sign, but we need to be a bit careful. It is a bullish sign, but we need a confirmation. Okay, so if you seen, okay, like that one, it retested it, but closed slightly, very, very slightly, 1 or 2 pips above the resistance level. So it broke it, but we don't know whether it will continue moving up or down. Another candle came bullish. Okay, that could be a possible entry point, but it's a bit risky to be an entry point. Why is that? Because we're not sure whether this is just an overbought condition and will get back to its ranging market. So what you need to be very careful about, if you identify an indecision, a breakout of, in this case, it's the resistance area, but some indecision at that level, indecision above the resistance area that was just broke, like this one, you see, it broke it, but afterwards it just gave us some sideways candles, small body candles with long tails. So it is very, it's in directionalist. Can you see these 3 candles? These 3, not the 4th one. These 3 indecision candles above the resistance area. So indecision candles, indecision sign above the resistance area now turns this resistance area into our new support. So it's not an entry point for the time being. Okay. Okay, it's not an entry point. It's a sign that this has turned into support. But when is a good time to enter? A good time to enter is either that one on the breakout of this latest high. So here, I didn't put the sign on, but I will put it out. Okay, that could be on the breakout. So this could be an entry point, or sorry, that's supposed to be EP, entry point, but that's great. Let me just try again. So difficult. Okay, or alternatively, to remain a bit patient until you identify your next resistance area, because remember, that resistance area has now turned into support, right? So we don't really know, we don't really have or identify the new resistance area. So the new resistance area has been identified over here. Why is that? Because it picked. We have this indecision movement over here until it turned down and extended losses. So that now turns as our resistance area. And the entry point in this case is a selling position. It could be the breakout of this latest low. So can you see this indecision, these two indecision candles? Can you see that the lowest level uh, in this indecision candles close to the resistance level is that one? So the break below that latest low is an entry point for a selling position with stop loss at the resistance area, at our new resistance area, more precisely slightly above our resistance area. And target, can anyone tell me what could be the potential target in this trade? Anyone? Come on, I'm sure you know. What could be our target in this case? No one? Yeah, perfect, Blake. Yes, previous support. So now support that we have identified over here could act as our target. And if decline extends with big bearish candles, we could even consider target 2 to be at the very first support area. Okay, let's move on. Another example. Okay, so let's take it from the very beginning. We could see our asset sideways over here, right? Until it gapped up and posted a new peak over here. So that's our resistance area. And you can see we had two doji candles over here. Can you see those two? Doji candles. So that means indecision at resistance area. And then a very strong bearish one, which turned below not only these two, but even below the last four candles. So that could be an entry point to the downside with target our previous resistance and target to our previous support level. So this could be our very first target, and this could be our second target if we want to have multiple targets. It doesn't mean that you have to have multiple targets. Do you understand how it works, guys? Hopefully you do. What will be the best time frame? It doesn't matter. Have you noticed? It's just the key is to stick on it. So if you are Tatenda, if you are a weekly trader or a day trader, that's fine. But stick to it. You see, over here, I have based my decision on weekly trade, and I didn't explain that further, but I had a weekly chart, so I stick to it. And any decisions I was about to do will be based on this weekly chart. So it means that that will be a trade that will last for weeks or even months, because the breakout over here of my latest resistance followed an indecision above the resistance area. So remember, this is not an entry point, but an entry point could be on the breakout, an extension above this indecision, which came here. So that could be an entry point, because remember, indecision, firstly, indecision at the support or resistance level means reversal. Indecision above the resistance level is not an entry, but once the asset breaks this sideways move, that could be an entry point. With stop loss, our previous support area, etc. But what I'm trying to do, sorry, I'm confusing you. I had over here a weekly chart that, even though I didn't put a timeline on, was supposed to be, it is a dollar yen 4-hour chart, and I stick to it. I didn't change my time frame in order to go and to check also the 1 hour or the daily chart. No, I stick to it. I remained on that one. Any decision, any trade I took was solely on this 4-hour chart. Over here as well, that is a 30 minutes chart. I put my support and resistance level. I was monitoring the 30 minutes chart. I put my stop loss, my entry, my targets on the 30 minutes chart. I didn't shift to a different time frame. So it's a a price action. It's a strategy that can be applied in every single time frame, but you need to stick on it and um, not like shifting from one to the other. What I'm trying to make you understand is that if you have monitored your 30-minute chart and you have identified your resistance, support levels, entry level, don't go higher or lower to 13 minutes or 1 hour, because this will confuse you. Okay? So let's see something else as well, because so far we spoke only for price action at the case in which we have a ranging market and we have identified indecision into a range market. Let's see something else. Let's see, however, a pattern, a candlestick pattern, because sometimes it's not like a straight line. I mean, it's not always the indecision and the sideways movement is not always like sideways like this one, stuck into a barrier. Sometimes it's with some patterns, such as descending triangles, ascending triangles, head and shoulders, pennant, flags, and etc. So in this case, we had seen, okay, it was initially the asset was moving down. This is a daily chart, by the way. It was moving down, but at some point, we had identified some higher lows, and you can see that, yeah, higher lows, but also consecutive highs at approximately the same level. So by connecting these lines with a trend line, these peaks with a trend line, and by connecting the lows, we could identify an ascending triangle. The same mentality stance, okay? So in an ascending triangle pattern, you can still have support and resistance level. You can identify any potential breakout. You can still gain information in regards to what the price action indicates. So what we have over here, we have connected the highs, and it was like struggling to break this particular area. So we connected. So this is our resistance area, right? By connecting the lows, this is our support area. Because again, we have seen some kind of indecision using this support area. And that means rebound. And indeed, this is what happened. Up. Indecision, up. We don't have indecision, we don't have doji candles over here, but we still have indecision because we had a bullish and a nearly equally bearish one. So reversal, reversal, reversal. But that's not the important thing. The important thing other than that is that we also have identified an ascending triangle. So in an ascending triangle, the top line is our resistance because it's the supply line, and the supply line is flat. That means that bears defeated. Demand line, which is this one, is rising, which means that bulls are in charge. So a descending triangle tends to be a bullish pattern. So, okay, we have identified, but we need to be patient because, okay, we know that in theory an ascending triangle is a bullish pattern, but we need to wait for a confirmation, right? Remember that in an ascending triangle, actually, we can use an ascending triangle in order to predict the potential breakout, because we said that it tends to be a bullish pattern. And because this demand line is rising, that means that bulls are in charge. And they are attempting to break out on several occasions in order to, and they have gained momentum each time. Can you see they have attempted here, here, here? So interpreting price action, remember, it's very objective. So it's common for two traders who may have seen this to arrive in two different conclusions, right? The decision, sorry, you lost me. I don't know what time you lost me, but okay, as I was saying, interpreting price action, we said that is very subjective. So it's very common for two traders who are seeing this chart and this ascending triangle to arrive at a different conclusion. One may say that it's a bearish downtrend, and another one may believe that this is a potential near-term turn around. So we have two opposite things, but the breakout of the ascending triangle, which will confirm who is correct. So the breakout over here, it was the confirmation that indeed the underlying momentum is bullish. Okay. Right? Because we know that ascending triangle tends to be a bullish pattern, but until we have a confirmation, we cannot take a decision and we cannot enter the market. But a breakout above a closure, you need to confirm that there is a closure of the candle above this supply flat line, this resistance line. A closure above it, okay, could lead to a long position with target this time. Okay, the target can be set based on the base range of the triangle. So you measure the distance, the distance from the resistance to the support, and you can use that distance as your target. Okay, is that clear? So over here, what we have the bullish pattern. We have a closure of the candle outside our come on, outside above our. Why I cannot delete this? Oops. Outside our above our resistance. Okay. Also, another confirmation that they will continue moving higher is the fact that despite the next candle being fully bearish, it managed to sustain a support above the resistance line. So this resistance is now a support area with target being placed at the same distance as the base range. So support in this case is better, even though this has now turned from resistance to support. However, for setting your stop loss, you better place your stop loss slightly below this new support level. So, okay, not on the support level, because it will retest, it might retest it, and this is what tends to happen. It might retest it in the near future, and indeed in this case it happened. So it's better to place your stop loss slightly below it. So over here, on my perspective, a good stop loss will be here, slightly below the previous bottom and below my support level. Okay, so time is it 56 past. We have a lot of examples, but I've put a lot of text on so you can study them also by yourself afterwards. So what we have over here, this is a 4-hour chart, by the way. Okay, so that's why I'm trying to make you understand that if you have seen a preceding trend, you have identified support and resistance levels, and you monitor a particular asset, stick on the time frame that you prefer. Don't shift from one to the other. If you are a 1-hour trader, stick on that. Monitor only your 30 minutes chart. If you are a 15-minute chart trader, stick on that. If you are an hour trader, stick on that. Whatever, okay? So what we have over here, we had a very, very sharp decline that stopped over here. So that automatically, it's our temporary support level. Okay, what happened? What happens that we got some indecision over here. Other than this doji candle, we've seen some sideways movement for 5 sessions in a row. So that's indecision in support level. So we have preceding trend, indecision at support. So that means reversal. So an entry point could be taken with this candle over here. Once this candle bullishly cross and move away from the support area and this indecision candles, that could be an entry point long with target at the previous resistance area. Now, if you have missed that, you can see that you have put a line on this as your temporary support. Then you have seen a rebound, so an indecision over here. So that means that that's our new resistance area. Pull back down, rebounded again, pull back down, rebounded again. And we have something common over here. We have something common. We have the same support area. I'm struggling to move further down. So that will be our new support. And why I'm saying all this, because even if you missed these, even if you missed these, etc., these support and resistance areas will help you in the future. Okay, so let's assume that you missed all that. Okay, but you have seen this breakout. So up to its resistance level, again retesting again the resistance level, didn't manage to break it until it eventually break it over here. So that could be a nice entry level. Why? Because we have a reversal, we have a breakout of resistance. Okay, we have, actually my mistake, a safer, if I can say, entry point will have been after the indecision is over. So that's a very, very strong bullish signal. Okay, but that will be an even better one because we have indecision. But it's okay if you want to take the entry over here, that's fine, but you need to put your stop loss below the latest low, which will be here, stop loss. And in order to identify your target level, you can either measure, okay, measure the previous distance between the previous support and resistance level, or identify the previous highs, and the previous highs are over here. So that could be your target area. Where can we get the recordings? It will be sent to you in your email. I assume within the day. Check your spams if you cannot see it in your email, okay? So that could be a nice target level, stop loss over here if you decide to take the entry over here. If you miss this entry, and you are waiting a bit to see what happened, you can see that we have this long tail indecision candle over here. So on the breakout of it, so here, that would be another entry point long with target, the same target actually, the previous resistance area. Again, remember that even if you missed all this, again, an indecision at resistance or support levels is an opportunity because it implies to reversal. So even if you missed all this, the indecision over here, this bullish, then bearish, then bullish, then bearish, which means indecision, that's a sign that it could turn down again to retest its support level. Because this resistance level has now turned into support level. So that could be your short position with target at the previous resistance, which now is our new support. Again, indecision at support, which means this reversal with target at the previous resistance, and so on and so forth. Okay, you need to be a bit patient. Don't be sad if you missed an opportunity. There are plenty. As long as you are careful and focused and not emotionally driven or greedy. Do we understand now why many traders prefer price action solely? I think you do. So what we have over here, down, temporary support, up. So this is our resistance. And we have indecision over here because it's an evening star formation. Can you see this evening star formation? Because a bullish, a doji with long tail, and then a quick bearish one. So that's an evening star formation, which is a bearish sign. Bearish sign at the resistance area. So that means a reversal to the downside. So that's a short position at this area over here. Entry. You see, once the evening star formation is been confirmed and fully completed, as an entry point for a short position with target at the previous support. Right? Again, preceding trend, support, rebound, reversal, retesting its support, again rebound, and retesting this area again. So that automatically do this area our new resistance area, and this as our new support. On the breakout of our support level over here, that's a bearish signal. We could enter or wait for confirmation, right? Some indecision and a sideways movement followed until we had a very, very strong sign that this long downtrend will continue and extended declines. We stop loss that one or at this floor over here, slightly above this floor over here. Okay. I mean, there are plenty of examples, so I'm not going to go through them all. I think I covered them all. What I want you to be very, very careful is this kind of extreme moves. This is S&P 500 daily, an extreme move to the downwards. So there was a reversal and a very aggressive selling, which it supported over here at 25.20 with long down legs and a very increasing volume over here. So support, long tails, potentially implied to a reversal. But be very careful because such a sharp moves, they need, the reversal needs confirmation. Okay, and my last for a few days or session, I mean, because of the aggressive selling, so a correction is needed. So if Fibonacci, okay, we don't, which is a price action, but you need to check the candles. So these are overextended candles, so it's better either to avoid them or make sure that you have a confirmation on the reversal. I'm not referring only to these long legs, but also the reversal confirmation. So that could be an entry point because it managed to uh, to retest and breaks these 1, 2, 3, 4, 5, 6 period highs. An even better one would be that one. A bit of a correction, but extended higher. But extreme moves are a bit unpredictable, so you might consider avoiding them or wait until the market calms down. I shouldn't put indicators on, my mistake. I did it quite quick. That's why. But yeah, focus on the candles. Now, a very last, another example. I think we've seen that. Sorry, my bad. It's the same example as in the very first slides, but I'm giving you alternative points as well, in case that you missed this as an entry point, or you missed this as an entry point to the downside, short entry. Another one could be that one. So we have 1, 2 candles with the same relative lows. So a break of those with this candle, that could be an entry point to the downside with targets, either that one or the bottom one. As long as you add a reasonable risk and reward ratio, this has a lot of success ratio. Or trailing stop loss, why not? So we're gonna finish with our, actually I have 3 more examples, but okay, 8 minutes above the hour. Okay, let's see this as well. Where is the smartest place to set my stop? We already show a lot of examples where you should set your stop loss or your targets. These are just written down in order to give you also ideas. We said that one way to set your stop loss is using the support and resistance area. So slightly behind the support or resistance area. So if you are in a short position, slightly above the resistance area. If you are in a long position, be slightly below your support area. The stronger the trend is, the better, the more the barriers in that area. Also, don't put your stop too wide. Okay, you might consider setting trailing stop loss as well. Okay, you don't necessarily need to use you do with the way I demonstrate. You can use trailing stop loss as well, but make sure that they are not too wide and make sure that you have a reasonable risk and reward ratio. If your target is 20 pips higher, then your stop loss should be around 10 pips lower, so 1 to 2 risk and reward ratio. Now, where should I set my target? Again, you can use your support and resistance areas. They can help you they can be used for target levels. Yeah, and the same thing stands, risk and reward ratio. Have in mind, predetermine, each one of you should have a trading plan, should have predetermined before even start its trading career his support and his risk and reward ratio, the percentage that he wants to risk every week or every day or every month. What's how many he wants to gain overall every month, and etc. Okay. Yes, you can use synthetic indices. I'm not sure. That's an interesting question. So Tatenda is asking, can we use the same strategy, like the price action, in synthetic indices like crash, boom, volatility? Yes, the reply is yes. Okay, markets are markets, regardless, and trading is trading, regardless if it's the fiat currencies or cryptos, or they're still derivatives, right? They're still derivatives, but um, in regards to synthetic indices, there, I know that they are very, very volatile. So it's okay using price action, but you should predetermine in advance your risk and reward ratio. And once you are ready to enter the market, set risk management. Do your risk management, where your target should be, where your stop loss should be, in precisely. You should predetermine this before you enter the market, and make sure that you have set appropriate target and support level, in order, if something happens, if I don't know, news or something happens, and there is a lot of noise in the market, you will not stop out. And if you stopped out, you will not suffer major losses. So if you are a trader that use these kinds of synthetic indices, then risk management is extremely important. Extremely important. The same stands for your question, Daniel. Price action trading is a strategy, can be applied everywhere, but where you decide uh, to apply it, that's on your discretion. But from what you're asking me, both Daniel and Tantenda, you are selecting firstly, you have selected indices that we don't offer as a company, exactly because they are very risky and very volatile. HFM doesn't offer synthetic indices, and doesn't offer binary option either, because we care for our clients. These are very, very volatile assets. It's okay to use price action trading, but take care. Do risk management. Predetermine what might be your loss in case if the trend comes against you, and whether you are okay with it. Okay. Yeah, so I have 3 more examples, but I'm gonna call it a date. It's just for your own information, in order to make you understand, and make you and help you to see more and more and more examples, in order to comprehend how the price action trading um, uh, uh, can be applied. But is what it is you carefully monitor the body of the candle, the tail of the candles, the resistance support levels. You see, this was a very significant breakout, because it's a nearly full body candle without any tail at the bottom, only a tail at the up. So this suggests that bulls are in control. You see, no tail to the downside, just a tiny one. So it means that sellers are a bit absent. So that's a very strong breakout, bullish breakout of my previous resistance, which I have identified because I've seen a lot of indecision and a retest of the same area again and again. So that was my resistance. Broke, so that was a nice entry point with targets at the previous resistance areas. okay? And so on and so forth. Yes, Samuel. Can you have a look on our past webinar that is called where to set your stop loss? I think this is how it's called, my previous webinar. Stuart has also I mean, let me check if I can find them, okay? Just to make your life a bit easier. Past webinars. We have plenty of webinars about stop losses, alternative ones, different ones, but you can see everything and decide what you understand the most, what you found easier, what you find uh, easy to understand, easy to identify. So that's why we provide severals, because each one of us is different, right? So come on, come on, come on, come on. Give me just a second. The body of the candle matters, guys. Okay, don't forget that. You see this? It retested the support level several times, but it didn't manage to break it. Instead, we had long tails. The long tails and the indecision at the support level was supposed to be a reversal signal, but eventually it managed to break down with a very strong bearish candle with a long tail downwards. So that means that the selling pressure that we are seeing over here indeed confirmed, and we had an increasing selling pressure. So that's a long position, a short position, sorry. What I was about to do, yes, I was about to share some webinars about stops, where the alternative ways to set your stop loss. One is that one. Come on. Watch. I had login. I had login. Come on, come on, come on. Sorry, give me a second. Yes, price action ignores technicals and fundamentals. Price action trading is the monitor solely of the candles. Okay. Obviously, it would be good to be aware that, for example, tomorrow or Thursday is ECB, because you might want to avoid any market noise. But yeah, the price action tends to be to ignore fundamental. Actually, okay, let me clear this mess. Price action for people that are using it in a daily, weekly, and monthly chart ignores technical indicators or near-term fundamentals. For example, what I mean, ignores NFP every month, because we are referring to weekly and monthly charts. Now, if you're gonna apply price action intraday, please check your calendar in the morning to see whether you have a very volatile event, such as the NFP or ECB meeting. But if you have set your stop loss and target at a reasonable level, not risking a lot, I mean a reasonable risk and reward, it should be okay. You should be able to avoid the noise. Okay. So in regards to the past webinars on stop losses, give me a second. Past webinars. They are on the website, by the way, but I'm just helping you in order to Okay, give me a second. I'm gonna give you the links to YouTube. Will be easier for you as well. So we need stop. So we have this one, which is mine. So there we have these. Send to all. We have these. Choosing stop loss points. This one, we have plenty. Okay, send to all. We have this one from Moto as well, so we have plenty. Send to all. Very useful one from Stuart, which is combines target stops and trade size. I think this is where you should start from, that the very last one that I'm sending. So I have some questions here. I think price action should support fundamental. Okay. Price action. No, it's two different things. Okay, different things. You can actually give me a second to reply to one of your of the attendees as well. What I was about to tell you, I forgot right now. Yeah, sorry. So, okay, just to give you on the same, just to inform you of what Aodo is asking. I think price action should support fundamental analysis, assuming you have a strong currency, which you should be buying, but price action is saying you should sell. I think instead of selling, you should wait for opportunity to buy. Which you should buy, but price action is saying, okay, nah, exactly, okay, although this is okay, this is confusing. Price action is price action. So if you notice, we have set some support and resistance levels targets, which were in the near future. What I mean near future, the next few days, the next few weeks, the next few hours. Fundamental analysis, however, is a very long term a very long-term analysis. What I mean, we knew actually that ECB, sorry, Fed will. We knew like since last year that ECB will keep increasing and proceeding with further tightening. Okay, that means stronger dollar. So based on that, we could enter long on dollar, but in the very, very long term. Long term means months. Based on this fundamental analysis, based on the Fed tightening, or you could also go short on euro dollar based on the strong Fed, on the hawkish Fed, and the very, very dovish ECB. That's fundamental analysis. Price action analysis is solely by monitoring the candles. It's upon your discretion whether you wanna choose either fundamental or technical. Okay, fundamentals. So price action is simply the study of the price movement. So so you can obviously keep yourself up to date with fundamentals, okay? But this is a different form of analysis. So you need to keep yourself up to date with fundamentals if you have taken a trade, I don't know, in the daily chart, and you know that this week we have an FP, for example, just to avoid the noise. But price action traders don't track fundamental events because the information gained from fundamental events it's already been captured by the prevailing prices. Price action traders and price action strategy implies to price movement as the ultimate signal provider. If you want to go against that and you believe that you should combine both, then you should try it in a demo account maybe. And I don't know which time frame you're referring to, obviously, because if you are thinking price action trading along with fundamental analysis for a day, I mean in the 4-hour chart or 1-hour chart, okay, that will make some sense because you might want to avoid entering the market during a news release, during a data release, but just that's pretty much it. It's just it can be used only with this side. I mean, you cannot be swing trader and at the same time be fundamental trader and at the same time be price action trader or a technical trader, etc. Each one of us should find what works for him. Okay, so it's one way to analyze the markets and it's solely, as I said, focus on what the price is telling us. So by combining it with fundamentals, I'm not sure whether it will, at the end, it will confuse you or even give you the impression or even mislead you. You should choose. Obviously, it can be combined, but it can be combined in the long term, like in the weekly chart. For example, let me give you an example actually. It's a bit tricky. What you're asking is a bit tricky, but it's reasonable. So, for example, dollar index. Let's check out dollar index. Okay, the Fed start tightening. When did the Fed start tightening? I'm trying to remember. Fed start tightening. Let me check because I don't remember when was the last time that they start tightening. It was last year. It was, when was it? Was it last year in June? Was it? Don't remember. So you see, let me just delete everything. Okay. Okay, first of all, let's do that. Okay, cannot see when the Fed start tightening. I should have it. Where does anyone remember? I think it was February. Yes, it was in February. So what we have over here is the weekly chart. Okay, what we have, presetting trend, downtrend, right? A floor over here between December 2020 up to May 2021, right? Some kind of a resistance area over here. Let me put lines. These lines are more helpful. Yeah. So even though, my dear Aondo and my dear, yeah, Aondo, even though the Fed start tightening in February 2022, so this year, February 2022 is up here, is here, this is February, the dollar appreciated and started moving higher much earlier, since a year ago, nearly a year ago. So if you were solely focused on the fundamental in this case, you would probably have missed the beginning of the trend, or at least an earlier entry in the long term, because we had the support, we had a bit sideways movement at the support, rebound, resistance, pullback, sideways indecision at the support until it eventually broke this resistance area over here. So that was an entry signal, as long as it kept appreciating and moving away from the resistance area. And what happened over here, we had some kind of a correction. Let me just pull that in. It's tiny flag. But if you were solely focused on the price action, you should either have taken an entry over here or over here, which will lasted for many, many weeks, 26 weeks more precisely, and with gains up to 106 pips. Do you understand? I mean, we didn't knew whether the Fed is about to tighten and when it's about to tighten before. They were keep saying that we will remain in line with the markets, we'll keep monitoring the data, and etc. But they actually increase rates highs over here, so you will have missed the start. So you need to decide what kind of trader you are. I cannot tell you what is better and what worse. Both are brilliant. Both are brilliant. Depends. Depends on you. Do you get what I mean? Hopefully you do. So sometimes, it depends. It depends on your personality. I will close my question over there. Depends if you're a person that is patient enough, open positions that might last months, weeks, and just leave them as it is and be patient, or you might be intraday trader, or short-term trader. If you're this kind of trader, you might consider price action as well. In any case, you can consider price action, but usually fundamental traders are long-term traders. Okay. Now I have more questions. So those places that was recommended for stop loss, most of the time market, I always come there and hit my stop loss and go back to the original predicted point. Yes, because you need to put your stop loss slightly above your support or resistance level. Have you noticed that I was putting as a stop loss, as my stop loss? Let me go back. Oops. Above, not even the support level, the resistance level, above even the latest high, above my peak, slightly above my peak, just to be sure, just to make sure that it will not stop me out. So it's not only to put your stop loss behind your support or resistance level, but preferably behind your latest peak if you are about to go short, or below your latest bottom if you are about to go long. Okay, or use your risk and reward ratio. Those places that was okay, you have put the same question again and again. So is that clear, Tiara Corede? Okay. I feel that you're not convinced. Is this something that happened to you very often, or once every 5 trades, for example? Very often. So it means that you have set your stop losses very, very tight. So, okay, what I would like you to do in order to be able to help you, I want you to make some screenshots for me, maybe from your old trades where you have set your stop loss or something, to write me down. I mean, to put on your charts where did you set your stop loss, your targets, and sending me an email over here in order to see what you're doing wrong or how you could do it better. Yes, using your stop loss ATR a single ATR or double ATR, that's fair enough. That's one way to do it. Yes, that's ATR is quite useful as well. But yes, if you want me to help you with it, I would like you to send me screenshots of your um, failed trades to see whether it's something that you're doing. I mean, whether you are putting your stop loss too tight and etc. And explain me why you decided also that stop loss. I want to understand your approach. Although yes, we have an ATR webinar as well, and yes, a reasonable stop loss is by using um, a single ATR or a double ATR, having in mind though that target is double the distance from the stop loss, okay? At least double. So that's why I'm saying it's not solely about using double ATR for stop loss. Is where you're setting your stop loss, your target. Sorry, because if you're setting your target tighter, but your stop loss far away, the only thing that you're managed to do is like fail major losses if it turns against you. I mean, your risk should be less than your profit. Guys, I need to call it a date. Um, do you have any further questions? Webinars. Okay, let me. I'm gonna text it. Webinars at hfm.com. Send to all. Thank you very much, all, for your attendance, for hearing me. Hopefully, I managed to help you. Any questions, please send me an email at webinars at hfm, sorry, hfm.com. And I will reply as soon as possible. Thank you very much. Have a great day ahead and see you again tomorrow. Okay. So tomorrow we have the webinar, a webinar with Stuart about scalping strategies. Okay. Thank you very much. Have a great day ahead. See you again tomorrow. Bye-bye.